Will Lloyd, tell me about tail risk. Why is it so important, not just for VelocityShares, but for investors?
It's interesting. The last couple of years have been very strong in the equity markets, but people are now thinking back to 2008. So the last time we had a big tail event, and they're trying to think of ways that they can hedge their portfolios against those kind of events. And that's what people are focused on right now. And you're seeing that in the development of new products that have come out in the alternative space.
Well, one of your products is the VelocityShares Tail Risk Large Cap Hedged ETF. Tell me how this works.
Essentially what's happening is you're looking at ways that you can combine an equity exposure with a volatility exposure. So that if you have a big event, you don't suffer as much in that downturn. Again, hedging that tail risk event.
But these events don't come along so often. You only get one financial crisis every few decades. So is this kind of like an insurance policy?
Touch wood that it only happens every couple of decades, because certainly I remember what it was like in 2008 and how dramatic that event was. And if you think about it, how long it took the US and portfolios to recover from that event. So hopefully it doesn't happen for decades to come, but people are concerned about that.
So people should have this in their portfolio, but how much of their portfolio should they have in an ETF or a fund that might only pay off or really be useful a few times in a decade perhaps?
Well, and that's what's happening right now. You're seeing new products come out. The alternative mutual funds have grown dramatically. And one of the things that we've seen really this year is that people are now in those alternative mutual funds combining equity exposures with volatility exposures, because I think they're more concerned about, again, that tail event. And they're concerned it may happen more than every decade.
But it's not just a matter of playing defense. You're going to make money on these as well, because these things are going to move up and it's not correlated to the market, right?
It's tend to be negatively correlated to the market, but again, you can't say you're going to make money in them.
It's
again,
more of an
fingers
insurance
crossed.
policy. Okay, and then finally, what's next when it comes to alternative mutual funds or ETFs? Because this is a growing space.
You're right, it's growing rapidly. When we look at new products, what we try to do is think about what investors need in their portfolio, or what exposures they want to hedge, or what views they want to be able to take, and the most efficient way to do that. So we actually spend a lot of time on new products and coming up with ideas. So we have a long list of products that we want to bring to market, and hopefully many will come this year.
Well, I'm looking forward to seeing them. Thanks a lot, Will.
Thank you, Greg.
Thank you for watching The Street.